Today, Bitcoin falls to end the week after hitting a new record yesterday. Top holders of Trump's meme token gathered to have dinner with the president, while some Democrats protested the event. The CEO of Borderless.xyz reacts to this week's development for crypto regulation, with the Senate advancing the Genius Act stablecoin regulation bill. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Crypto prices in the red to end the week after President Trump called for a 50% tariff on the EU starting in June. As of noon Eastern, Bitcoin slid from above the $110,000 level and was trading just shy of $109,000. Yesterday, the cryptocurrency broke a new record above $111,000. Ether fell more than 3.5% to $2,569, and XRP dropped nearly 3%. For the week, Bitcoin is up nearly 5%, on pace for its sixth straight weekly gain for the first time since a 7-week rally ended in November of 2020. Ether and XRP, however, are down for the week, both on pace to break a 5-week rally. Okay, let's talk about the top stories. President Trump's exclusive event for his top meme coin holders took place last night at his private country club in Virginia. The Trump token contest drew $148 million in global purchases, with top-ranked wallets getting direct access to the president. Among those who attended was Justin Sun, the Chinese-born founder of the Tron blockchain, who said this week that he was the contest's top-ranked investor. Yesterday, Sun posted videos and photos of himself at the dinner on X. On Wednesday, Sun posted a video of himself visiting the executive office building, which is part of the White House complex. About 3 months ago, the U.S. Securities and Exchange Commission paused its 2023 fraud case against Sun, citing public interest. The Trump coin was launched just ahead of the president's inauguration in January and has drawn heavy scrutiny from Democratic lawmakers who accuse Trump of profiting from his position of power. In fact, in a news conference hours before the dinner yesterday, Democratic Senator Chris Murphy, who introduced legislation that would ban sitting presidents from profiting off meme coins while in office, called the event, quote, maybe the most corrupt of all of the corruption. And Senator Elizabeth Warren accused Trump of using the presidency to make himself richer through crypto. With Republicans in control of both chambers of Congress, Democrats have limited ability to force action. Now, in response to our questions about concerns from Democrats, Deputy White House Press Secretary Anna Kelly said the president is working to secure good deals for the American people, not for himself, and that he only acts in the best interest of the American public. Next, crypto exchange Kraken is planning to expand U.S. markets access internationally through Web3. The company announced yesterday it would soon offer tokenized securities to select international customers through a new product called X Stocks. This is in partnership with blockchain developer Bakkt. Customers will be able to trade tokenized U.S. stocks and ETFs around the clock on the Solana blockchain, including tokenized shares of Apple, Tesla, and Nvidia. All right, for our main story, big news for potential crypto legislation this week with the Senate advancing the Genius Act stablecoin regulation bill. The Genius Act has garnered bipartisan support and is moving towards a final vote, which is expected sometime following the Memorial Day recess. Crypto World's Tanay McKeel spoke with the CEO of Borderless.xyz about this week's development and why he thinks it's a win for the U.S.
Really kind of a watershed moment in Congress earlier this week with the update on the Genius Act moving forward, or leading to a watershed moment, hopefully. There are so many implications for this legislation that touch all parts of crypto, and I want to get into that with you. But to start, what was sort of your biggest takeaway from the update that we got?
Thanks for having me. It's I think we can already say that it's a watershed moment, right? Obviously, the Genius Act hasn't been passed into law yet, but this is the closest that we've been in a very, very long time as a country to having some sort of sensible regulatory policy around a blockchain-based asset. I think there is obviously some, nuanced discussion about whether the language is appropriate, and is fully optimized, or what may happen next as some of the amendments are proposed. But I think it's very safe to say that in general, there's a lot of optimism, and the sentiment in the industry is extremely, extremely positive that, we are making progress towards having some sort of regulatory framework in the US. And hopefully, this does help us kind of catch up to some other jurisdictions who are a little bit ahead of us now, and the US can come back and really come strong into stablecoin innovation.
Yeah, so I mean, I heard optimism and positivity. Obviously, it has been said again and again that clarity is just good for everybody. I don't want to make it so black and white this early, but initially, who are the biggest winners and losers of the industry to you? I mean, there's the stablecoin issuers, the exchanges, the banks. Let's start with winners.
The biggest winner, honestly, is America, and we can get into market participants as well. But I think this administration has realized that stablecoins are an incredibly effective tool in exporting the U.S. dollar around the world, and stablecoins are something that should be embraced and given strong regulatory frameworks. Are things that really should be encouraged and places the U.S. should be leading. In general, I think the more that we have clear regulation, the more that benefits most of the industry participants. The blockchain industry has kind of a bad rap for rug pulls and meme coins and lots of other things that I'm certainly not supportive of. But in general, it hasn't been that way because the blockchain industry has wanted to do things that are nefarious. It's been that way because there just hasn't been strong regulation and there hasn't been strong guidance, right? So I think everybody's of the mind that any guidance is better than none. When we think about stablecoins, what this is a huge win for are kind of fully reserved stablecoins that are taking a regulatory first approach. And in general, with stablecoins, you have a few different categories. You have algorithmic stablecoins, which I've long argued shouldn't be called stablecoins. And I think that experiment's kind of ended in failure. There's far fewer algorithmic stablecoins coming now. And really what we need and what this act focuses on are fully reserved stablecoins where every token is backed by $1 and that dollar is held in cash or cash equivalents, T-bills, treasuries, things like that. Stablecoins will, over the next 5 to 10 years, become one of the, if not the biggest buyers of T-bills. So this creates tremendous buy-side demand for those assets as stablecoins grow. And in the huge kind of battle that is ensuing between Circle and Tether as the two major stablecoin issuers, I definitely think that this benefits Circle. Circle has done a lot of work on the government side of things. They've done a lot of work, and you can see from their S1 filings just how much money they spend on distribution and on a lot of regulatory compliance. They probably come out the big winner if this becomes law. And Tether's recently pulled out of the EU market, and the question will be, what do they do for the US market? Are they going to pull out of the US as well and really focus on emerging markets, which is honestly where there's a ton of stablecoin traction today: Latin America, Africa, Southeast and South Asia? Or are they going to create new, more regulated products that are tailored to the US and EU markets? And I think there only time will tell.
Let's look a little bit further down the road. Banks have expressed a lot of interest in jumping into stablecoins. We spoke earlier this week, and you had pointed out that what they really need to see is clear legislation, and then guidance that it would be okay for them to do this. So we're almost on our way to one. What would that mean for Circle a little bit further down the road? Would Circle become competitive with the banks, or would they be working together? How do you see that playing out?
I think the biggest barrier that we keep hearing about today for real institutional scale stablecoin adoption, and you can make a great argument. You could say, Kevin, we already have institutional scale stablecoin adoption. And that's true in a lot of ways. But I'm talking about from companies or custodians like BNY Mellon and some of the kind of the largest institutional players in the US. What they struggle with is being able to quantify the counterparty risk of changing from essentially the Fed as their counterparty to this, as it's been put, small startup that's not even public yet. And now Circle's working to change that. Maybe it's an S1, maybe it's an acquisition, kind of who knows which way they go. But for a lot of very, very large institutional players, when you switch from kind of traditional banking to a stablecoin, your counterparty risk does switch from basically the Fed to whoever the stablecoin issuer is. And I think if banks start to enter the space, which to the point that you made, I think they need two things. One is clear kind of regulatory frameworks, which we're on the path to. And the other is kind of clear approvals from the Fed, FDIC, et cetera, which I think is actually a much tougher road. If they start to issue stablecoins, then sure, there's some nuances to the change of the counterparty risk profile. But in general, your counterparty risk changes a lot less, right? And you can go from banking at B of A to transacting in a B of A issued stablecoin, as an example, is a much, much smaller counterparty risk change than going from banking at B of A to having, billions or trillions in assets in a token issued by Circle.
Okay, that's all for Crypto World this week. We are back again on Tuesday after the Memorial Day holiday with coverage of the biggest Bitcoin conference in the US, Bitcoin 2025. This year, the event is taking place in Las Vegas, and we will be there on the ground bringing you conversations with top executives from crypto-related companies as well as White House officials. Now, this year's keynote speaker is, in fact, Vice President J.D. Vance. We look forward to seeing you next week.